All right. Hi, everybody. Welcome to our training today, Nonprofit Budgeting During Uncertain Times. My name is Kyle Robbins, and I am an Audit Senior Manager at Larson and Company. Before I get into the training, I did want to quickly go through some housekeeping items with everybody. So, first of all, just thanks for participating. Thanks for getting on. We're excited to be able to present to you and be able to share our knowledge with you. I do want to point out that this presentation is being recorded, so we can provide it as a resource to others who weren't able to participate today, and also for you if you want to re-listen into anything. We do like to point out, especially during COVID season, there are a lot of changes. Hopefully, most of the stuff I'm presenting today, there won't be too much affected by any changes in laws or regulations or anything like that. However, if things come up, there's always changes that can happen. So we just want to make sure you reach out to us with any questions, should anything change out there. Throughout the presentation, if you have any questions, feel free to click the chat button that's located at the bottom of the screen. And I will take some time periodically throughout the presentation to look at those questions and just make sure we're getting any of the questions you have answered. And then if you have any questions that are kind of more specific to your organization, feel free to reach out after the presentation at any time. So my contact information is there at the bottom of the screen. My email, phone number, it's also on the last slide of this presentation. So we can provide the slides as well for you to go through. So they'll be there if you would like to reach out to me with any questions you have. Happy to help and answer any questions you have. So, okay, one more housekeeping item, the CPE. So we are offering 1 hour of CPE for this presentation. There are going to be 5 poll questions throughout. So that's kind of to help us track your attendance and show to the UACPA that we are tracking attendance and that you did attend the full presentation to get the full 1 hour credit. We will be sending out an evaluation form for you to fill out. Those are also a required part to get the CPE. And then the CPE forms, we'll be sending those out within 2 weeks of this presentation, hopefully sooner, but if you don't get it within 2 weeks, feel free to reach out. And if you have any questions on the CPE process, if you fill out everything and don't get the CPE form from us, feel free to reach out and we can get that for you. Okay. So I do want to just quickly kind of introduce myself. So like I already said, I am an audit senior manager here at Larson and Company. I have over 10 years of experience in public accounting. I did have some time with the national CPA firm in Salt Lake City. I do specialize in working with nonprofit organizations. I do have the AICPA nonprofit certificate, and I do try to provide nonprofit specific trainings as often as I can. So hopefully you can reach out to me as a resource as you have it. I do have some clients I've worked on listed there as well. If you are a client and you're not listed there, don't be offended, and you can tell me, hey, I want to be listed in the future, and I'll list you for sure. So had to point that out, and you can maybe laugh a little bit, but maybe not. I did include a picture of me and my wife. I do like to just point out, she's a big part of my life and what I do. It supports me a lot. So I'm able to do what I do because she helps me and pushes me and lets me do what I want to do and what I enjoy doing. We've been married for 14 years and we have 3 boys. So it's a fun life. Anyway, just a quick background on Larson and Company, just so you have some information on our firm. The firm was started in 1975, and we've worked with nonprofit organizations since our inception. And some of our first clients are still our clients today. So Um, we like to point that out, that the clients we work with, we are able to build good relationships with them and provide good service, and they've enjoyed working with us enough to still be around. We do have a large nonprofit audit and tax team. We work with over 80 nonprofit organizations with various sizes, and we do serve several nonprofits throughout the state. You can see here we have offices in Salt Lake City, Spanish Fork, Moab, and St. George. So that's a kind of brief history of Larson and Company. So glad you guys could be here, and we'll kind of get going here. So the topic today is budgeting during uncertain times. So I have been able to do some presentations on this and some blog posts on this. So this is kind of just a detailed presentation on some of that information. So today I did want to cover, in uncertain times, what do I do about my budget? How do I better manage cash flows during uncertain times? And then also discuss some key indicators that your board could be looking at to kind of help monitor, cash flow budgeting during any time, but specifically during, these times. So to get going, what to do about my budget. So I do want to, the purpose of this isn't to give a detailed training on how to budget, but I do want to cover kind of a little bit of budgeting and just talk a little bit about it. So budgeting responsibilities. So, the purpose of the budget is really to set and clarify the organization's goals in a financial way. It should help you allocate your resources, whether they be scarce or whether they be plenty. Just a way to look at how you can allocate those. It's to help provide a roadmap for management, program directors, other staff, but also the board, so they can kind of see how things are going. And then it is to allow management and the board to monitor the progress along the way. And that's a key part of the budget that sometimes gets overlooked. As far as the approval of the budget, it's the fundamental block, building block of sound financial management. The having a budget and approving the budget. Management is responsible for creating the annual budget, but it is the board's responsibility to review and adopt and approve that annual budget. So the board can help in preparation of the budget as well, but it is important to know that the board is responsible for adopting that budget. And we do have our first poll question here. So we'll go ahead and get that pulled up. There we go. So this is just kind of a informational, it's not right or wrong type of poll questions. It's just kind of get to know your situation and get to know the audience. Okay, I think we've got that wrapped up. And here are the poll results. So in most cases here, this is actually great. The accounting department sounds like, oh, great. It sounds like the accounting department's the ones who are, in most cases, preparing your budget, which is good. And the executive director is also, in some cases, doing it here. I've run into circumstances where the treasurer does do the budget. That's not always the best circumstance to have. So nobody here is doing that. So that's good to know. All right. So let's move on, talk a little bit more about the budgeting process. So as far as the process goes, this is the typical budgeting process. defining the budget timeline, what the budget's going to cover, estimating your costs and resources. The parts that are kind of more applicable now to what we're going to talk about today is just during the uncertain times where you're going to be having most of your focus. So in this case, I underlined those two areas. So estimate the expected dates and amounts of revenue that will be generated. And we'll talk a little bit more about adjusting your budget in a little bit. And then also comparing the revenue expectations to your estimated expenses. So we'll talk a little bit more about that down the road too. But as far as the process goes, you do want to finalize your budget before the year starts and then present that budget to the board for their approval before your fiscal year starts. So just a little bit more background on budgeting. So you've had your budget approved and your year's going on and you're finding out things aren't going so great. So what do you do now? Typically, whether times are uncertain or not, the board should be reviewing the budget periodically. So they should be looking at the actuals and comparing them to what's been budgeted. And I like to point out that, without that review and accountability, sometimes there really is not a good purpose for the budget. If people aren't being held accountable to it, then there's not, what's the point of exactly following it exactly? What's the point of putting the budget together if it's not going to be followed up on and people are going to be held accountable for it? So the question then too comes up, can I alter or reforecast my budget? So as I was doing research and preparing blog posts and presentations and stuff, I found that there are varying opinions out there as far as whether you should or should not reforecast your budget. Some people say, your budget should be set in stone. You should not change it at any time. Other people consider the budget to be fluid and can change at any moment type of thing. So I don't think either of those is really the best approach. I think it's really, depending on your organization, it's going to be somewhere in the middle of that. Like I was saying, if you're really, really fluid, you're not holding people accountable to the budget, then they're not going to try as hard to follow that budget. They're going to be more laid back as far as meeting those goals and that budget. So that saying, though, I do feel like there are circumstances too where you can make changes to the budget and should make changes to the budget. And I think COVID is a great example of a time when that is appropriate to do. So I think you should, as you revisit your budget, if there is a significant thing that has happened, you should consider revising your budget. So let's talk a little bit about that, how to go about that. So the reforecasting process, it should involve creating a separate revised budget. You can use your existing budget as a starting point, but you should consider any year-to-date results. And then also you should consider, the estimates for the remaining fiscal year and determine what changes need to be made. And then that reforecast process should also be revisited monthly or quarterly, especially as, hard times drag out. Do any new changes need to be made to that budget? And then, you should be held accountable to a reforecast budget as well, similar to original budget. So the board should be helping and monitoring with this process. All right, we've got another poll question. So let's get that up and see some responses. All right, so the question is, how often does the board review your budget? And there's no right or wrong answer. We're just trying to see what the answers are out there. Okay, so here's our answers. So most cases, it is quarterly. So annually when approved, quarterly and monthly. So, there are good and bad things about both of the most of those answers. The last one was the board does not review the budget at all, which nobody said that, so that's great. You have a board who is actually reviewing it. And so depending on the circumstances or depending on your specific organization, they can be reviewing it as needed. I think during times where there are a lot of changes to what you expect in your budget, I think the board should most likely be reviewing it more often than they typically do, just to make sure things are going to be okay. And we'll get more into that later in the presentation as well. So, all right. So you're reforecasting your budget. Typically, you'd want to start with revenue. And some of these considerations are just typical budgeting considerations. But as you are reforecasting your budget, you most likely will want to get more in depth into these projections and things that you're expecting. So the revenue considerations, how much are we expecting in public contributions? As you're revisiting it, you're going to be wanting to really evaluate, are those expectations realistic? And then typically you'd look at what does our history tell us, but in a year like this year, it's our history isn't going to be too helpful. So you're going to have to look at other considerations. And then have our major contributors had a good or a bad year financially. So if you have contributions you're expecting to receive, you'll want to potentially evaluate those contributors and kind of decide whether or not you really expect to receive those. And then just what are fundraising possibilities and the costs of fundraising. So you'll need to really reevaluate those, especially this year where a lot of fundraising events aren't happening, can't happen. And so you'll need to really reevaluate those and see if there's anything you can do virtually that can help make up for some things you're missing out. Let's see. Okay, so as you're evaluating these revenue considerations, so one thing to help you with this is to kind of incorporate risk to those projections. So one thing you can do is you can kind of assign a grade to your expected revenue streams. So you can kind of use in this case, we're going to use A, B, C, D. And, A is solid. It's 100%. We're going to get that contribution. B is 75% likely you're going to get it. Sorry, B, 75%. I think I said C. Anyway, C is 50%, D is 25%. And this slide kind of shows those percentages in a typical year. In this year, I think whether it's a proposal, whether it's a letter of intent, whether it's a scheduled meeting with somebody, I think those kind of can go out the window to where you're going to need to evaluate those solid written verbal promises and decide, okay, are those really 100%? Perhaps you have a verbal promise that at the beginning of the year was 100%, but now mid-year, it's probably really 75 or 50%. So as you're reforecasting your budget and you're looking at your potential revenue streams, contribution streams, you can relook at those and kind of, if you didn't do this process in the first place, you can start doing it in a reforecast, or you can consider it doing it for a future year. But I don't think you need to necessarily get into this depth every year, but you can if you want to. So this is just kind of an additional thing to consider as you're budgeting. And then also with incorporating risk, you can kind of follow two different methods. So once you've assigned those A, B, C, D probabilities, you can then kind of follow a different method. So there's a discount method where you would multiply your expected amount by that probability. And then that would be your budget. And that's the discount method. And then there's the cutoff method, to where you would only include the revenues with a probability 75% or greater, or you could choose the cutoff threshold. Like you could say, okay, we're only going to include those that are greater than 65%, 75% likelihood of actually coming in. So those are two different methods. And if you follow one method, it's best to stick with that method and not change it each time you're reforecasting your budget. So if you reforecast your budget Q1, you use the discount method. Don't go, okay, we're going to use the cutoff method next time, kind of thing. So let's walk through kind of an example of what this looks like. So here we go. So here's 6 different revenue streams, 6 different contributions. And so what we've done here is we have, okay, there's these 6. Let's go through them and evaluate how likely they really are to be received. So this top one, ABC Foundation, that's a solid promise. We're going to get that. Let's give that an A grade. Probability 100%. XYZ, that's more likely, 75%. So let's give that a B grade kind of thing. So you go through each of these and you grade them. And then in this budget without risk column, so that's the promise that they've given. So that's without any discounts applied. So ABC Foundation promised $90,000. XYZ promised $30,000. So following the budget discount method, you would multiply that 90,000 by 100%, and that's going to be your budget contribution for that specific one. For the XYZ Foundation, that's a 75% likelihood. So you're going to, the budget discount method, you're going to multiply that 30,000 by 75%, and you get 22,500. So that's your budget. The budget cutoff method is ABC is 100, so you include that one. XYZ is 75, so you include that one, and you just include the full amount. You don't discount it at all. And so using these two methods, the budget discount method results in 168,000 budget coming in instead of the original 215 that you probably had. And then the budget cutoff comes in at 155,000. So in this case, the budget cutoff method was a lower result, budget result. That's not, I can't guarantee that that's always going to be the case, that the budget cutoff is going to be lower than the budget discount. That just happened in this circumstance. So that's kind of the approach to use to help you reforecast, incorporate risk, and redo your budget. And like I said, you can do this even when you're not in troubled times. You want to have a good solid budget. This is something you can be doing to improve your budgeting and make it more accurate. But I don't think it's a necessary thing to do every single year. So just a little bit more in depth. Okay, so that's kind of a way to look at your revenues. So let's get into some expense considerations you can follow. So you have your revenue set, you know what's coming in. So you'll want to revisit those budgeted expenses. So a lot of times you look at your expenses and you automatically see, ooh, our salaries and wages are really high. I personally, and I've read some other things too, is don't jump straight to your salaries and wages. It may be your largest expense, but it's also your largest asset. A lot of what your organization does is because of your employees and what they're able to do. Sorry, I'm just trying to get the light. Okay. So your employees help you out a ton. So if you lose your employees, you lose a lot. So that's not always the best place to go to start out with. You can look at, if you have any outside consultants, those type of expenses, maybe consider cutting back there. if you have any, if you can cut back on office supplies, printing, travel expenses, which most of those you can do during COVID because you're not, a lot of people are working from home. So there's not going to be those office supply expenses. You're not, for any printing costs, maybe now's a good time to look at going 100% electronic, seeing if you can cut back on any of those costs. I know these are smaller costs, but everything helps. Travel, you're not going to be traveling as much. Most conferences out there are now virtual to where you don't have to travel out to them. If you have any fundraising events scheduled, look into doing cheaper venues. Look at doing them right over Zoom, like the UNA conference. They did that over Zoom this year. You may not get as many funds over Zoom, but you just have to evaluate the cost benefit of it. If you're going to get more, if you're going to pay more for the venue, but you get more from doing it, then you can consider still doing it. If you aren't going to get as much because of restrictions on the amount of people who can attend an event, then it may be best to just do it over Zoom anyway, kind of thing, or just at a different venue. So I recommend looking at those things first, but that's not always going to solve the problem. You'll probably need to get into looking at employees and salaries and where you can cut back there, but I just recommend not going there first. And because I think from some experiences I've had too, just serving on boards, I served on a board where we had that we weren't able to pay employees very much, and so it came up to where an employee had another offer for $1.50 more an hour kind of thing, to where I told them, I said, okay, well, is that $1.50 worth keeping them to where you have continuity, you have better morale, employee morale. It'll help the executive director have better morale because she won't have to train new employees. So, sometimes there are costs, hidden costs in losing employees, employee turnover that really should be considered when you're thinking about cutting costs with employees. So those are just some things to consider for the expense side. And you can review review your budget expenses line by line and just determine the areas that you can cut back on. So there's that. And then just some other considerations that you can think about. So if you do reforecast your budget, you do need to remember that, similar to the original budget, that those reforecasted budgets should be approved by the board. They should review those and approve those. They should be reviewed in each board meeting, especially, when things are more uncertain. They should be looking at those more closely, and especially if you're making changes periodically, they should be looking at those changes and comparing those to actuals and budgeted amounts. One thing is you can consider creating multiple budgets with different scenarios. I'll go through kind of an example you could do. And then what you do is, when you have the different scenarios, you have an A scenario, a B scenario, a C scenario. And if A happens, we're going to follow budget A. If B happens, we're going to follow budget B. If C happens, we'll follow budget C. When we were working on junior achievements audit this past year, they followed this approach, where the board approved the 3 different scenarios to where they didn't have to go back and revisit it again, have the board approve it again. They already had these 3 scenarios set up to where the board, approved those budgets and said, okay, if B happens, yes, you're good there. So it was just kind of to where after the fact, they could go back and say, hey board, B happened, so this is what we did. And they'd be like, okay, we reviewed that, approved that, and we were good with that approach. Because in their case, there was just a lot of uncertainty around school, whether school would happen in the fall, and whether or not they would be having students coming into their junior achievement city. So I think that's kind of an example that other organizations can consider following as well. that would be a good practice. So I do have another poll question here, and then I'll go through that scenario of kind of an example of how you can do that. So let's do poll question 3. Okay, so yeah, this question's how has COVID-19 impacted your board's meeting schedule? And this is just the meeting schedule. It's not it doesn't really matter. You can just, but it's not the location. So if you're still meeting, but over Zoom, that counts. Okay, great. So it looks like the majority of boards are still meeting just as often, still keeping their same schedule, which is great. And then some boards are even meeting more often, which I think is happening. Like in this case, 22% has said that. So I think that is happening quite often, to where as boards are having to meet more often to kind of go through some of these things and just make sure that the entity's surviving. A few of your boards have met less often, but none have not met at all. So that's great. Okay, so let's go through a scenario real quick of kind of what you could do. So it's similar to the other table I showed, but so you have these different contributions and that should be coming in. So promises to give. So these are what you're budgeting for. Scenario 1, you say, okay, if scenario 1 happens, this is what we expect. We're going to get these. Scenario 2, okay, something happens to kind of limit these scenario 2 probabilities. So in this case, you have a budget 1 scenario that results in 168,000 of budgeted contributions coming in. And then budget 2 scenario, you've got 158,000. So it's a lower, you know, if scenario 2 is a worse off scenario than 1, but it should, you know, if it's because of something happening, you know, the board can look at it and be like, okay, we can approve that budget if that happens, kind of thing. So that's kind of an example of how to come up with 2 different scenarios. You can do it, you know, you can do it 3 scenarios, 4 scenarios, depending on your organization. It just takes more time. So it's a matter of what time you have to spend on it. Okay, I figured that's the end of that section. We're gonna have a couple more sections. I wanted to go through and see if there are any questions on that area. So if you have any questions, you know, feel free to put them in the chat. We do have a Q&A, and I don't think we have any questions in there yet. So if you could put them in the chat, I'll see those first, but I can check the Q&A periodically as well. Okay. All right, and that's fine if there's no questions. So let's go ahead and move on then. Okay, so this next section, kind of wanted to go through how to better manage cash flow, especially at this time. So really the essence of your budget is to kind of understand your cash inflows and the required cash outflows. So it's kind of a cash basis presentation of your position and your expected position. So I mean, I think it's key in the budgeting process, because if most of your expenses are budgeted in the beginning of the year, but most of your contributions come near the end of the year, you're going to run into cash flow problems. So as you're doing your budget, it's important to understand what the cash flows are like. just because then you won't run into any problems. If you look at an annual budget and things work out great, you might be missing, some cash shortages at some points of the year, if those expenses are front heavy in your year. So it's important to know your current cash position. We'll cover some of these in coming slides. You'll want to use all your resources. You'll want to keep your communication open, and you don't want to delay in making decisions in these type of situations. So I'm going to cover a couple of things here. So know your current cash position. So I'm going to talk about a couple of things you can do to kind of monitor your cash position. There's 2 ratios I'm going to talk about, and then I'll go through a kind of cash flow projection that you could follow. There's other examples you can use as well, but I'll just go through one I have. And I can provide it to you if you'd like as part of the training information. So one question is, how long can your organization last without any short-term cash inflows? So this ratio kind of helps you show that. You'll take your cash and cash equivalents. You'll take out any restricted cash that are for, specific purposes that you can't use for your operations. That you can just use for programs. And then you will divide that by your typical month's expenses. So this ratio will let you know how many months your organization can operate at its current rate without any additional cash inflows. So another thing to consider in this ratio is if you do have any receivables or pledges that aren't donor restricted for a specific purpose, they're just time restricted, and so they're receivable. And so if you expect to receive those in the next month, then you can include those amounts on the top row, and that kind of helps you. It'll show, okay, we really can go a little bit longer because we have this cash coming in. So that's one ratio you can use to help out and kind of know what your current cash position is. Another ratio you can use is if you're ceasing operations, but you're still wanting to maintain your payroll expenses. So you're not expecting to have operating expenses. You're mostly just expecting to have, payroll and rent type of things. So in this case, your top's the bottom and the top's the same. And then you'll divide that by the bottom, which is the monthly payroll plus your health insurance, plus any rent and occupancy that you'll have to pay for as well for them to continue working. So, I did point out earlier, your employees are really one of your strongest assets you have. So if you want to, even if you have closures, but you want to keep paying your employees and keep them on for as long as you can, this is a good ratio to see, okay, well, how long can we really do this? So this ratio kind of will just help you evaluate how long you can do that for. So these 2 ratios are kind of a basic approach to follow to help determine your immediate cash flow needs and how long you can use your cash for those purposes. Another approach is to prepare a short-term cash flow projection. So I'm going to walk through that real quick and kind of show you an example of what you can do for a short-term cash flow projection. Okay, so we have here is my screen not shared anymore? Can somebody chat that to me, please? It looks like it's not. If you can see the Excel file, we're good. If people can't, okay, thanks, Wayne. It usually has a green bar around it, and it doesn't have a green bar around it, so I got worried. Okay. All right, so this is kind of a short-term cash flow projection you can follow. So what you'll do is this can kind of match your budget that you have. So you have your total annual budget in this column, and then you'll want to turn it into, make it more short term. So you can do this 3 months, you can do this 6 months, you can do this however long you'd want. But in this case, we have a 6-month budget projection. And so here at the top, there's what's your opening cash balance? How much cash do you have right now? And then you can use this to kind of project what revenues are coming in and what expenses do we have. So you'll want to make sure you follow what your expected time frame is. So in this case, you have federal grants. We're expecting 300,000 in the next 6 months. So is it really even? Are you getting it each month, or are you getting 150 in May, 75 in July, and 75 in August? So if that's how you're really getting it, you'd want to put that in this projection that way. And then you can see the check figure just shows, okay, that's zeroed out. I've got that, all of that budgeted in there. And then you do that for each of these. So like this state grant, let's say it is monthly. So that one we get 20,000 each month, and we just go across there like that. So you do that for each of your revenue streams and kind of see, okay, those are our cash inflows, and this is cash basis. So you'll want to do these cash basis, not accrual basis, just to be able to really monitor your true cash flows. And then down here at the bottom, you have your cash outflows. So there's the salaries and wages. Right now, I just have those evenly spread throughout 6 months. If you have any variations to that, you'd want to follow those variations. Similar with employee benefits, and then your rent's going to be similar. However, if you have any other program related expenses that vary month to month, you'll want to make sure to put those. So like we have 100,000 this first month that we'll have to be spending, 50,000 the next month, and then the rest of it's 25,000 a month kind of thing, to where that's how those cash outflows are going. The fundraising costs, let's say we just have the one fundraising activity in June, so that's going to be in June kind of thing. And then these other general and administrative expenses can be evenly spread. So this is kind of how you use this to see what your short-term cash flows are going to look like. So in this case, we started out with 1 million. At the end of April, we're showing 847,000, and then it just kind of goes throughout. So, if I only had 500,000 in cash, then things are, dwindling faster kind of thing. So this will just kind of help you see what you are projecting for your short-term cash flows. Okay. And yeah, like I said, we can provide this example for you, but there are other examples out there as well for you to use. Okay. So I'm going to get back into the slideshow now. Okay. All right. And so the rest of these are just kind of a couple more suggestions to help you follow when you have cash flow problems. Just make sure to try to use all the resources you have as you use your board members, involve the board members, senior leadership to help you determine appropriate solutions for managing your cash flow. So if you filled out this cash flow projection, it's looking bleak over the next 6 months, communicate that up to the board, up to senior leadership as soon as you can, to just make sure that they're aware of those problems and can kind of try to help come up with some solutions. If you have a lot of contributions coming from, one area or a specific group in a community, it doesn't hurt to reach out to them just to kind of get ideas and maybe some additional help from them in getting through the hard times. So those are just some ideas there. And then, keeping communication open with, between management and the board and potential donors as you see fit, kind of thing. So, don't go quiet. I think a lot of times in a crisis, you put so much of your focus on solving the problem that our communication kind of isn't a high priority. So, other times, we're on our planned course. Other times we're on a planned course and there's no changes. And so we don't feel like we need to be communicating any changes. But I feel like you still need to be communicating, hey, things are still how they were, nothing's changed. But it's good to still communicate that just so people are aware that you're aware and you're actively doing what you need to do to get through it, kind of thing. So yeah, I just think in a time of crisis, communication's key. You need it to help keep the community involved with the nonprofit, keep board members involved. So just make sure you keep that communication open. I know I had an experience in the prior firm I worked for. We kind of had a crisis where our audit department, we had 2 partners and they both left. And so we didn't have any partners in our office and so we kind of were in a time of crisis of, hey, we need audit partners so we can, please our clients, continue to do audit services. And it was a corporate firm. So we had a corporate office out of state that they were responsible for hiring. And initially they communicated with us, told us how things were going. But it took 2 years for them to find a partner to hire and bring into the office. And the communication was good at first, and then it just stopped. And we were kind of just left. We didn't know what was going on. We didn't know if they were interviewing anybody. We didn't know if they were trying. And so a lot of people ended up leaving the firm during that time. And so it was kind of like, if they would have been communicating how things were going, I feel like the stress level of, hey, we're never going to have another partner probably would have been a lot less. And, some of the people leaving could have been averted. So that's kind of a personal example of that. And then I think one of the biggest things is don't delay. So a lot of times, you put off a decision making to kind of see how things go. And in a cash flow matter, the earlier you evaluate the cash flow position, the more cash you'll have to put your plan in place. So you can't delay when making these type of projections, these type of decisions, because cash is just going to keep going out with the expenses being paid, to where the sooner you make the decision, the more cash you'll have to help you follow through on any plan you make. So, I mean, like the best example I have of that is earlier this year when there was the earthquake. I was sitting in one of our rooms. Earthquake started. I kind of just sat there. I'm like, oh, hey, it's an earthquake. And then like 15 seconds later, I'm in the same spot, and I'm thinking, okay, this is lasting longer than I thought. I should probably do something. And in an earthquake, specifically in an earthquake, the longer the earthquake lasts, the more damage happens and the more dangerous it becomes. And if you don't do anything immediately, you're further away from a safe spot. So I think that applies here to cash flow, and just making sure that you're in a safe spot to go forward. Okay. Poll question number 4. Let's do poll question number 4. So how has COVID changed your organization's review over its cash flow? Okay. All right, so it's pretty split between reviewing cash flow much more often and reviewing cash flow about the same. And then there are some out there that, you're so busy trying to get more cash flow that you look at it less often, which is kind of hopefully a situation that can be improved on. So awesome. Okay, thanks everybody for that. Okay, are there any questions out there on things we covered so far? I'll check the Q&A as well. Okay. All right, so we're running close to the end, so I'm gonna go through one more thing that can help the board monitor things a little easier. So I'm going to kind of talk about just key indicators that the board could review. So a tool boards can use is what's called a dashboard. Some boards have them, some boards don't. Some people have heard of them, some people haven't. So I'll do a quick review of them. But a dashboard helps the board and management get a handle on large amount of data. So it kind of just summarizes a large amount of data in something that's easy to follow. So kind of gives just a snapshot view of the situation. It can visually illustrate performance over time, and it can show some key financial indicators. And then it also can be used to help monitor social media influence. So that's more for the marketing aspect of things. The first three are kind of more of a financial aspect. So I'll go through these, but the purpose of the dashboard, it's mostly to just help facilitate timely identification of things, whether it's the success or challenges that you're facing. It's just supposed to make it a little bit more timely, more easier for them to review, especially if they don't have, good solid financial background. Most people can read a chart and see, okay, I understand what's going on in that chart. It can also help identify relationships between different activities. And then it should help encourage discussion on progress towards goals. Your key indicators that you use on a dashboard should follow the goals of the organization. And then it should help connect your decisions that you're making to the data and evidence that you're getting. And then finally, it should align your definition of success across the organization. So as far as selecting elements in a dashboard, so there's no one size fits all approach to creating a dashboard. It's going to be different organization to organization, but you will want to have the key indicators that you look at. You want to make sure that they really matter to you and your organization and your board, because if they don't matter, they're not going to follow through on them. They're not going to really look at them, and they're not going to try to understand them and what they mean to the organization. So it's important to make sure they matter. And it can be a good reporting tool for you to use with the board and with management. And you can even use them with funders to show funders how things are going in the organization. Okay, last polling question, and then I'll go through a couple of examples of a dashboard. So yeah, I'm just kind of curious, does your board or management use a dashboard at your organization? Oops, sorry. Okay. So most of you out there do not have a dashboard in place, and that's fine. It's just, so it's something that you may consider implementing to kind of help with the board's oversight and management oversight and kind of the connection between the two. And I can, if you're interested in getting more information on it after this training, then I'm happy to help provide some more information. But I'll go through a couple of quick examples here for you. So this top one just shows, months cash on hand. So you can kind of see, so if the organization has the goal, hey, we want to have 3 months cash on hand at all times kind of thing, this will show the board, okay, in October 17, we had 2 months, then we had 3, then we had 3, great, we met our goal, but then we went back down. So it kind of shows your progress at how you're meeting that goal. So, you know, the board can see, okay, our goal is the red line. Where are we in respect to that goal, and how are we doing? And then they can see, okay, we're doing well or we're not doing well at that point, and kind of decide, okay, well, what should we be doing differently? The bottom one is a revenue to budget comparison that just shows, okay, what is our budget and what is the revenue we got? And so you can kind of just, rather than just seeing numbers, you can just see, okay, I can see this on a graph and it'll show me what's happening, and I can compare it to the budget. So that can sometimes help board members. The next slide is another example. So if you're a membership organization, the top one just shows, you know, total paid membership. We have a goal of having 270 members in the organization, and then the blue line just shows where you're at throughout the year. In this case, it was only through June, so you know, June hadn't been reported on yet, so that's why those are 0. But that's just an example of that. And then if you have luncheons and you have a goal, hey, we want to have so many number of people at the luncheon. You know, we have a goal of 80 each lunch. This shows, okay, first month we had over, December we had 254, great, and then it went down again, kind of thing. So that just easily shows you where you're at on those goals. And then, you know, you can do a bar graph as well on the right. You know, if you have a big conference, you can see, okay, our goal is to have 400 people register. How are we to this day? In this case, you know, it hadn't been any yet, but, you know, it could go up, and then you'd want to see that going up each month until the conference comes, and then you'd see, okay, we met that goal. Where were we at on that goal? So those are just some examples of some dashboard items you could use to help kind of your board see and understand some of the information that you present to them or that they review. Okay, any questions on dashboard? All right, I don't see any questions, and we're pretty much to our hour. I don't want to keep anybody over, so I'm not going to just keep chatting and chatting. But yeah, thanks everybody for getting on. I do have, that's just a summary, so we're not going to talk about that, but that's what we covered. I did want to get to this last slide for you, just so you can have, there's our website that you can go to get more information on us and our nonprofit services. And then my email address is also here as well. So, you know, feel free to reach out to me. Feel free to reach out to anybody else you work with at Larson. And we can help you in any way we can. We love working with nonprofits. So thanks everybody for joining today.